Hi, welcome to the class. In this class, we are going to be talking about understanding demand and supply zones, or you can call them order blocks. Now, demand and supply zones are very important zones on the chart. They are zones where price actually turn on the chart. Now, a lot of traders feel that price turns on support or resistance. Actually, from my experience, price will always turn at demand or supply zones. Now, when we go further into implementation, I will explain why price will always approach a demand and supply zone or order blocks. Let's go into the class. What is demand and supply zone? I like to define demand and supply zones as zones on the price chart where there is a tussle of price dominance between buyers and sellers. This zone on the chart is often seen as a ranging market or a consolidation zone. Now I'll go to a whiteboard so that I show you what I mean by this. Now, coming here, you find out that price, like I told you, doesn't move in a linear manner. It will go up, then consolidate a bit, shoot up again, consolidate, shoot up, probably accumulate and turn back in this direction, depending on what is happening on the economy of the nation at the moment. Now, these consolidation zones are what we call demand and supply zone. If price was heading in an upward direction like we see in this diagram, you will find out that when it consolidates to make another move, that zone of consolidation is called the supply zone. Now what happens is that the market will always want to maintain equilibrium. Once price moves like this, it creates an inefficiency in the market, also known as market imbalance. For price to come back to equilibrium, consolidation has to take place. So these consolidation zones are a way of bringing back price to equilibrium. Now what does it represent? It represents a place where the buyers and the sellers, that's the number of buyers you have in the market, equates the number of sellers in the market. That means at that point there's no one dominating the market. But shortly after this tussle of power, there is an influx of orders, maybe to the upside or to the downside. Now, for example, after this consolidation, there was an influx of buy orders that shot up this market to the upside. Now, this introduction of massive buys is what shoots up this market, creating an imbalance in the market. Now, knowing this market, every time there is an imbalance in the market will always return to this supply zone or demand zone, depending on the direction of the market, to pick orders that were left. Now, what is inefficiency? Let's look at the simple term, inefficiency or market imbalance. Now, if the market moves, if it moves up, it means that there are more buy orders than there are sell orders. So at the point of moving up, there will be more buy orders that have not been fulfilled around here. So in order to bring back this market to balance or to equilibrium, the market will find a way to come back to this zone to pick up those remaining buy orders before heading out again. Now, this is what causes movement in the market. The institutions and the banks know this movement in the market. They know these schematics. So they take advantage of these zones. They place their orders on these zones. It is actually their orders that create this imbalance in the market. Now, what do you do as a trader? You want to now trade along these institutions by placing your orders around this demand zone, so that when price comes back to pick the remaining orders, it picks your own orders. So let's go back to our board, no, to our slide. So coming back to this place, so I said I like to define demand and supply zone as a zone on the price chart where there is tussle of price dominance between the buyers and the sellers. This zone on the chart is often seen as a ranging market or a consolidation zone, like I have shown you. Now, shortly after this tussle, there is always a price rally, either to the upside or to the downside of the price. Now, this indicates the presence of high volume of either buy or sell orders in the market. So this high volume is now what creates movement in the market. Demand and supply zones are zones of high liquidity. We'll talk about liquidity in the next slide, because there are three basic terms you need to learn while discussing demand and supply zone. Now, in forex trading, one of the best kept secret is how to trade supply and demand zones easily and accurately. Not many traders utilize these areas in the market because they call them support and resistance zone. Actually, they are not support and resistance zones. They are zones of accumulation. They are zones of consolidation in the market where price tries to maintain equilibrium. Important concepts to learn when dealing with demand and supply zones. Volatility. Volatility talks about how often a pair or trading instrument changes in price. So if you have a pair or a trading instrument that changes erratically up and down, it means that that pair is very volatile. Example of such pair is the major pairs like Euro USD or the gold. You see how it can go up and come down at the slightest minute. So these pairs are called volatile market. And what causes volatility in the market actually is liquidity. If you have more people that are willing to buy or sell a pair, that pair definitely will be volatile. Now, volatility is good. It helps for movement. And once there's movement in the market, you are able to make more money in the market. Now, what is liquidity? Liquidity refers to how easy it is for a pair to be bought or sold in the market. An indication of liquidity is the number of orders. So if, just take for an example, if you have a commodity that is easy to be sold or easy to be bought, it means that there are more customers coming for that particular product. So what does liquidity in forex mean? It means that there are a lot of orders around this particular pair. So in forex, the major pairs are the most liquid because there are more trades on them per time than minor pairs and the exotic pairs. Imbalance. Order imbalance is a situation resulting from an excess of buy or sell orders for a specific security on a trading exchange, making it impossible to match the orders of buyers and sellers. So like I explained in the diagram, once there's an imbalance, it means that there are either more buys than sell or more sell than buy. So the market has to find a way to create back balance. This is what gives the market that rhythm or gives it the wave-like movement, because the market always wants to create balance. We look at all this in the live chart and see how to identify these zones. No, market price wants to remain at equilibrium at all times. So once there is imbalance in the market tries to close up the inefficiency in price. It's actually called inefficiency in price created by the imbalance. Important things to note: price movement will always turn from a demand and supply zone. So what it means is that, just like I told you, we sit back on the chart and look for zones where price will turn. Price will always turn from a demand and supply zone. Now, a lot of people think that price turns from a support and resistance zone. It doesn't turn from support and resistance. You will only see a price turn as support or resistance which you have drawn if there is an order block on that support and resistance. Now take note, a lot of traders draw their support and resistance and trend lines any way they like. There is no two trader that will draw the same support and resistance. But once you see an order block or a demand and supply zone in the market, it is the same for all traders across. So it makes it a very important zone. By the time we go into the chart and learn how to plot these zones on the chart, you will understand better, and we look at how price move between one demand zone to another supply zone. Now there are several demand and supply zones on the chart. It is now your job as a trader to determine which one will be the point price will turn. That is, which one will turn the price. So because we have a couple of demand and supply zones along the line of price, you have to now sit back and determine which will be the turning point for price. A lot of traders are of the notion that price, I've said this before, that price turns at the support or resistance. Actually, price will turn at a resistance or support only when there is a demand or supply zone present there. Demand and supply zones are present on all time frames. You will see demand and supply zone on all time frames. They are the smart money traders entry zone. So if you want to trade the smart money way, you have to learn where the demand and supply zones are. We'll discuss entries in the later modules. How to plot demand and supply. So I'll take you to my chart shortly. I'll see you in the next episode of this module. So see you as I go over to my chart. Thank you.